Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello MJ traders, we're going to look at a whole bunch of names today, the 5 major names. On top of that, we'll look at tgod, kshb, hexo, ogi, mpx, and cvsi. Before we get into it, just the lead up into today, swung a position on CGC, playing off of the hype leading into CGC's CEO, Bruce, being on CNBC. That's a lot of C's. He was on CNBC last night at 6 p.m. Eastern, sold leading into that. So headed into this morning with a fresh, clean slate, no position after locking in that profit. And this is just an example of how we prepare for the day and how I prepare for the day, where I write down all our key levels and then just a little blip here, looking for a gap up open on CGC and for some profit taking to lead into an initial quick drop. This is a potential bounce opportunity for a quick flip once the sellers have stopped and the buyers step back in. Liquidity and volatility will be back into this ticker for at least a few days. So my mindset is all cash and looking to buy the dip for a flip. And just a reminder for those newer to the channel, my strategy as a trader is higher capital scalp trading, essentially. I'm looking to lock in 20, 40 cent moves on CGC, buying and selling real quick. For me, that's very low risk and lower reward than if I held longer term. But what it allows me to do is constantly be taking steps forward with my account. Like I said the other day, if I have more money than yesterday, and then more money than the day before, and tomorrow I have more money than today, that's all I'm looking to do. That's my goal, is to just keep progressing. So while my strategy of short-term trading and locking in profits while I have them will always lag behind swing trading bulls when we're in a major bull run, as every single bull run in MJ has shown us in the past, that a lot of those gains get given back. So what my style allows me to do is not ever give back $1 of those gains. Obviously, I have red trades mixed in there, but just in terms of seeing my account making these big shifts and big spikes back and forth, that doesn't happen. It's more of this little stair-step pattern because I am doing that style of trading. So I've only been doing that for about a year, and it was cryptocurrency and then Canadian MJ that allowed me the capital to switch to a scalp trader. And I just find it so much easier to just have that guaranteed every single day income. I just spit. So CGC on the daily time frame, look at this volume. And this is reminding me of this bounce that we had back after the all-time high dump. We bounced very significantly, and look at the increasing volume. And then we started to pull back. Now, I don't believe that we're going to pull back and give the entire move back. I think this move is coming after enough consolidation, and we've had enough shift in the market as a whole that we will see a daily high or low when we do consolidate. But we're looking for a temporary top to be set in the near-term future. APA has earnings tomorrow morning. If that's a sell the news event, that's our catalyst for a temporary top to be marked. So it's going to be pretty impactful for APA for the rest of the sector, because this is the first glimpse into a quarter of recreation sales. And I'm not sure if that whole quarter meets those, if we were selling recreationally that entire quarter, but it's going to have a big chunk of that in there, and that's going to be important for expectations in all these other companies. And you see this in the tech sector and all these other sectors in the market, where the first of a group, first of a sector, everybody else in the sector significantly reacts to that first mover. And usually in the tech sector, it's Netflix that reports first, and you have names like Apple and Amazon and Google. They all react to Netflix earnings. So that's going to be a coin flip into tomorrow, and we're going to be watching how CGC and everybody else reacts. Looking like we're down a little bit pre-market in most of these names, not significantly, but down about 1% or so after the close. So we'll be watching tomorrow morning how that reaction goes. So at this point, CGC in 2 days has erased many weeks of downside. The volume is just absolutely massive. And this is the bulls. I said these bigger names that have more liquidity on these majorly listed exchanges aren't going to be seeing 40% moves in 6 days when I was talking about the small cap names. And of course, these bulls now are trying to prove me wrong. But at this point, we've still seen a 20% bounce in 2 days. That's absolutely massive, and that's wonderful opportunity for the bulls. But again, these lower tier names are running harder. And we'll look at some of those in just a moment, but certainly not complaining about CGC action. So the next resistance, there's a gap to fill here at 38.24, and we didn't fill that just barely, but 38.24 is a key resistance level to be watching, right? Not even a resistance level, but the next target. And after 38.24, we're looking at 40 psychological. And as far as support goes, we did consolidate, and there was another trade setup. This was one of the bounces that I played in CGC, where let's just go back in time, and we'll do the replay function here. So replaying, make me look bad. So replaying in time, we had a clear pullback of 6 candlesticks. And I look at this pullback and I look at how much time's left in the day, and it's 2 p.m. We have over 2 hours left of trading. And I say, all right, this is a significant pullback after a significant bull move. We know that this 15-minute time frame is extremely likely to see a bounce before the end of the day. So that tells me to be looking for a bullish entry opportunity. And again, not going for a home run or not going for a long-term trade entry, just looking for an entry for a 15-minute bounce. Even if it's going to set a lower high, I know that a 15-minute bounce is going to occur because we're not just going to see another 6 candles in a row of red right back to the end of the day. So then we get that follow through where we have the bounce starting to play out. An inside bar broke bullish, inside bar broke bullish. This is on the 15-minute time frame, but a very significant follow through on that bounce. Now here after hours with this weakness that we're seeing, and now we're down about 2% after hours, so slowly fading. But this is a 15-minute equilibrium with our high, low of that pullback, lower high with an inability to break the high of the day, and 35.60 is going to be our key support. So the most important key support for me on CGC is 35.60 because that's the only level that's nearby here in terms of a clearly established level that the bulls did hold, and we're seeing now a 3% drop. So not much volume behind this drop. It's not entirely telling at this point, but it is clear that we're going in the other direction than where we went yesterday, but this 15-minute equilibrium is what we're going to be watching into tomorrow. So APHA did not have a strong day. Looks like some people were locking in profit ahead of these earnings. It was down 3%, where most other names were up a good amount. ACB was up 9%, CGC up 12%, and CRON was about break even, TLRY about break even, but APHA clearly the weakest name today. So that's profit taking, with people taking risk off heading into the earnings report. We've got support down at 848, and then the next level after that is 828. As far as resistance levels go, on the 15-minute time frame, it's just a clear little lower high pattern, topped out at 913, 918, 923. So pretty much with the reaction to earnings tomorrow, it's either going to be a bullish reaction, and we're going to see a break of 923 and continuation to fill this gap, or it's going to be a bearish reaction, and we're looking down at 744. Let's see if there's other levels in here nearby. Next level I'd be looking at is 806. So 806 would be a level to be watching as a potential support level if it's a bearish reaction and we end up seeing a solid pullback in response. ACB, big bull move, finally playing catch up here, and look at the volume spike coming in. So we have been struggling to bounce for 2 weeks. Today is clearly the most bullish day that we've seen on this bounce. 831 is the most important resistance level. If we can't break 831, it will just be a lower high on the weekly. So the weekly chart tried to form a little double bottom down here, and it's all about 831 because we'll just have a really nice weekly tightening range if that level cannot break. So if we respond bearish to APHA, then we'll look for a pullback and to remain in this tightening range, perhaps into February. Depends on how significant the pullback is. But as of right now, that is the key resistance level. And for ACB support, afternoon consolidation set a level of 753 as the most important short-term support level to be watching. TLRY, daily inside bar, so that tells us it's just a tightening range forming. We have a wide range on that one candlestick. Then we formed a higher low and a lower high, pretty much building a base of support at $79. And we've got resistance at 82.13, 86.12, and 87.50. So if we see a bear break of 79, we're then looking down at 77.10, and that will be a pretty lackluster bull break of this equilibrium without a ton of follow through. We did get a solid amount of follow through. The bull break at 77.27, and we ran up to 87.50. So it was over a 10% follow through move. So just comparing it to everybody else in the sector, the last 2 days have been a bit disappointing, and we'll watch to see how this daily inside bar breaks tomorrow. Probably going to break in the direction that APHA reacts to its earnings. CRME on the daily time frame has been a big time mover. We saw an upper wick of profit taking today. Again, we're still watching this 13.95 level and anticipating that the bulls are going to be unable to break that on their first attempt to do so. So that's a potential top fishing level where if entering short, you exit if $14 breaks, and we're going to look for a pullback into the lower $12 range. But again, at this point, we have to lose the hourly uptrend. You can see every day, the last 6 days in a row is a higher low. Have to lose the hourly uptrend in order to see daily consolidation. And right now we had the low of the day at 12.59, a higher low at 12.70. So that hourly uptrend is still intact at this point. And once that is lost, this weekly equilibrium, we'll be looking for that to potentially tighten up and can start to form, really, because we have to see a clear rejection and pull back to form a higher low for this equilibrium to be in play. Now we're looking at N. So N was a gap up for profit taking kind of day, the third gap up open. Talking yesterday about how, if we think to ourselves, it's been a great run. Am I going to be able to rebuy at 165 at some point in the next month? And the odds are favoring that, yes, you'll be able to rebuy lower than that because of how far we ran. Volume climax signaling the top, bearish engulfing candlestick, close at the low of the day. Some of our members were shorting N today in anticipation of these very overextended conditions. The first candlestick in the morning, we had a base of support, 147 and 148, and then that broke at the end of the day. So bearish momentum at this point. We're still just going to look for a daily higher low, but that could be down in the 130, 120s even. So we have to see how much profit taking we get, how big the bear volume is on this pullback, and we can watch the 15-minute clear downtrend with lower highs at 153 and 156. Any bounce attempt that's under 153 is just a lower high. And the indication that the daily higher low will be set and the bulls are ready to shift back will be a change in the hourly trend. Change the hourly trend back to bullish with higher lows and higher highs, and the daily higher low will be set. But again, this is just day one of consolidation, and we close at the low of the day with momentum clearly favoring the bears. CGC at this point is continuing to pull back down, now about $1.10. Again, very low volume, but it is notable how much weaker we are compared to where we closed and not seeing much reaction in the other names like we are on CGC. TGod. So TGod gave us that daily higher low, and it changed that hourly trend to tell us that the daily higher low had been established. So let's look at this trend change where we had the low at 1241. We had a bounce to a lower high at, or 241, bounce to a lower high at 250, pulled back, higher low at 242, broke resistance, didn't get a whole lot of follow through. There's our convincing follow through with volume behind it. And that's the indication the daily higher low has been established. And now we're looking up to resistance to change the daily trend. We have to break 287. Nice follow through, nice little uptick in bull volume. And we have to see 287 break for the bulls in order to be looking up at 3 and 324, the next resistance after that. Hourly higher low of support on TGod is 267 to try and keep the bulls in full control and see this continuation. KSHB has been a beast. And this volume is some serious volume. And we look back historically, and this is the highest concentration of volume that we have seen pretty much ever. And we had that one huge volume day back here. But if we disregard that one day, we've got 3 of the highest volume days in a row. We've seen a move at this point of 437 all the way up, a 55, 60% move. And we had the earnings reaction. The initial bearish reaction was absorbed. The bulls bought that dip significantly and big time follow through today, closing at the high of the day. So again, this is one of our favorite plays of 2019. And we are now, after 670, looking at 693. After 693, we're looking at 740, and then we're looking at 851. We have 3 resistance levels left until the all-time high. This is a massive move. When we see consolidation on the daily time frame, we're absolutely going to be looking for bulls to buy that dip for a higher low, and we're going to be looking for KSHB to potentially hit all-time highs in 2019 as long as the broader market cooperates and does not collapse. So keep an eye on KSHB. HEXO, daily inside bar broke bullish, so while we broke one level of 635, we did not break the level of 663, which was the top at this point. So it was an equilibrium that broke bullish. We're still maintaining higher lows on the hourly, 614 and 616. Most important support levels short term. But if we don't get any follow through and we fall back and lose these hourly higher lows, that's obviously a red flag that daily consolidation is coming. So the inside bar bull break was a good sign, but the lack of follow through and the lack of ability to see continuation, we're still very extended at this point. This is another one of those names that's run 60%. So higher lows each day of this move, the last 6 days in a row. And if we see a break of 614, daily consolidation will be underway, and we'll look for the daily higher low to form. OGI. This is what every single bull wants their daily chart to look like. This comes with a big bull move of 45%, a bull flag of daily consolidation to form a higher low with lower wick showing bulls buying the dip, with declining bear volume on the pullback, increasing bull volume when the bulls say, all right, we're done consolidating, and then big volume when we follow through for continuation, confirming the trend change and seeing that shift in momentum. So here's another one where the hourly change in trend was an indication that the bulls had established the daily higher low. We had the low, high of the bounce, higher low, and then the bull break to start the day 2 days ago, and it's been nothing but bulls since then. Short term, we do have a little equilibrium to be watching on the 15-minute time frame, just like CGC, with our high, low of the pullback, lower high, trying to form a higher low. So tightening 15-minute range on OGI to be watching, and the weekly time frame we know still needs to consolidate, and pretty much this daily time frame is exactly what all weekly bulls in this sector want to see. Significant 3-week bull move, couple weeks of consolidation, 1 or 2 to give us a little bull flag, and then continuation. That would be the most significant event for the MJ sector that can take place in Q1 2019, in my opinion. It's weekly trend changes. So here's our bull move. We need healthy consolidation to a higher low, and then continuation is going to have a lot of names looking back towards those all-time highs if we do change these weekly trends, which again is a ways away from happening. And as I say each video, we're still in a vacuum of bullish environment. SPY is not pulling back yet. It's continuing to show us bulls buying the dip. Oil is on its 8th green day in a row. Oil has been on fire for the bulls, and we have to see what's the sector going to do when we get some healthy consolidation. But if oil's not going to consolidate, the S&P 500 is not going to consolidate, and that's going to keep the environment bullish for these names to continue trying to see some upside. MPX on the daily, this is one for the cup and handle pattern to be watching. Still no bull break just yet, but we're watching the resistance level, the pullback, the inability to break resistance, a potential bull flag, and if we can get a bull break at 97, 98, and 99, all in the same day with a volume spike, that's what we're watching out for. So that's the kind of scenario where if I can see the bulls are strong, if the bulls come out tomorrow and break 96 and 97 first thing, and I can see that the volume is going to be, we have half of today's volume in the first half hour of trading, that's going to tell me that the odds of a bull break are likely. So again, this is one to be keeping an eye on, and the MPX IAN deal is something that we're watching in Q1 2019 as well. And the discrepancy between those prices for the deal, and those of you who have been following along with what I'm talking about, they're evening out a little bit in terms of the premium that is on MPX, or I should say the discount is eroding a bit as we get closer to the potential deal going through. CVSI, this is the weekly chart that we need to be watching just because it's a beauty. High, low, lower, high, higher, low, lower, high, higher, low, and we're real tight. Most important levels for me are 380 support and 560 resistance. Weekly inside bar is forming, so that could be a potential early signal. If this closes this way tomorrow, then next week we'll watch for the inside bar break. That won't be the break of the equilibrium, but that will shift the odds. If we were to break this inside bar bullish, the odds that we're going to break 560 will increase. If we break it bearish, the odds that we're going to break 380 will increase. But I would love to see another bull move, an inability to break 560, a lower high form, a higher low in the low $4 range, and then a bull break. That would be an awesome equilibrium bull break on CVSI that would probably get a solid amount of follow through. So this is one to be watching in Q1 2019 as well, longer term time frame for a break of this tightening pattern. So I appreciate you all watching, and it's exciting out there. This is the time where we need to be protecting profits. We don't want to be entering bullish positions more than just quick flips and day trades at this point. I mean, you look at CGC on the daily time frame, we don't want to be buying into any kind of swing positions after a 20% move in 2 days. We want to be looking for healthy consolidation on the daily time frame in the near term. Doesn't mean we can't go up a little bit more. Again, it's all going to be dependent on the APHA earnings reaction that we see. But just in terms of risk to reward, at this point, the short-term train has left the station, and it's best to wait till things cool off a little bit if feeling that FOMO. So at the end here, we got some pigs from back in the day a couple years ago. And that's that. Enjoy the pigs. Have a good day.